Time now for the word on Wall Street. Top investors watching your money. Joining me now is Banríon Capital Management CEO Shana Sissel. Also with me, Rebecca Walser. Shana, good morning. I'm going to start with you here. Looking at futures this morning, we've got a, kind of a tepid start here. We're now negative, just slightly for the Dow, the Nasdaq, and the S&P. The Dow did close at a record high yesterday. The S&P and the 500, though, and the Nasdaq both slipped, dragged down by tech and by chip stocks. As we're looking ahead to NVIDIA, reporting earnings of the bell tomorrow with sales set to double for the second quarter. Are you expecting a strong performance from NVIDIA? Every quarter, the bar gets higher and higher for this company.
Yeah, it's harder and harder to be known for calling this stock a long time ago and being asked to predict these things because I have a greater and greater probability of being wrong. So I think that we'll continue to see strength in NVIDIA. They've been very good about having really clear outlook. The things I'm personally paying attention to is the Blackwell chip backlog and how that impacts not just NVIDIA, but consumers of those chips, AI producers, as well as ancillary players and secondary players around AI. So I think we'll see positive results from NVIDIA, but it's less and less likely that they'll be able to continue this 400% year-over-year increase in revenue and growth and in earnings. I think we'll start to see that come back. I think it's 110% year-over-year growth now, which I think people will be disappointed with, which is it's still amazing, but given its history, it's really hard for it to continue to, go straight up like a rocket ship. And so I think we should be preparing ourselves, maybe not this earnings cycle, but in the near future. They're just not going to be able to keep up this pace.
Mm-hmm. Yeah, no, you're right. Yeah, just because you win 4 Super Bowls doesn't mean you're going to win 4 more. Rebecca,
you're saying that to a Pats fan. What are you doing?
And I'm a Cowboys fan, so we're going to agree to disagree. But yes. Rebecca, let's talk about the Fed. So these comments from Richmond Fed President Thomas Barkin were interesting. He said the low hiring, low firing approach that U.S. businesses are currently taking for employment decision is unlikely to last. He basically says we might start to see more layoffs, especially if the economy gets worse. What do you make of that?
Yeah, he's basically saying the middle of the road is not going to continue, Cheryl, and that either we're going to see demand slow because the consumer is under too much pressure, either through layoffs or what have you, and so we will start to see numbers fall, or we're going to see demand continue, and then we will actually have hiring. So clearly he's saying we're not going to stay kind of where we are in this, not sure which way we're headed, and I think clearly we are kind of moving in a recessionary phase, and of course we should be, Cheryl, because why would the Fed be cutting if we're not? There's got to be a reason that they're needing to say that, September 18th we'll probably see our first cut. To me, I think we're still only going to get 25 basis points unless something more desperate happens between now and September 18th. So I do think we're at 25 basis points, but you can just look, Cheryl, you can see 1.27 million jobs have gone to foreign sourced people and 1.2 million jobs have been lost by American citizens. We're moving from full-time jobs to part-time jobs, and that is why we're in this low, we don't want to lay you off yet because we don't know if we're going to need you or not need you, but we're kind of getting ready to potentially have layoffs again.
Yeah. The concern about those layoffs, Shana, is certainly, I know that that's on your radar. You're saying here that you're really watching the U.S. jobless claims number, and if we hit something like a 260,000, that's another warning sign to you.
Yeah, there's something called the SOM rule, which has to do with the relative increase in unemployment rate being an indicator of recession, and we're getting dangerously close to that. So that's definitely something worth looking at. And I think, to Rebecca's point, the Fed is going to make the most conservative decision in cutting rates in September, because I think it also sees these relative cracks and it wants to be able to save some ammunition when it really needs it. And I think that's why we're most likely to see that 25 basis point cut, because they are paying very close attention to the employment markets.
Well, there is going to be another jobs report, to your point, before they meet. So that could certainly be a factor. All right, Shana Sissel, thank you for being here.
Thank you.
All right, we'll continue to talk in the season. It's getting underway. All right, Rebecca's going to stay.